Good evening. This is Ken Long at Tortoise Capital with a review of the daily trading plan for October 31st, 2016. Market remains in bullish normal conditions, barely. We're in the middle of neutral on an annual basis using the weekly RSI 14 at 53. The 10-day NDX is at 23 at the very bottom end of neutral. The threshold is 20. Percent stretch relative to the 200-day moving average is at 3.07%. Slope of the 50 is red bearish at a negative 0.20. ADX remains a strong trending bearish trend. The risk index is the 30-period moving average of the VIX divided by the 10. That number is 9.74, which is below the threshold of 1.0 for risk on versus risk off. So that puts us into risk off conditions. Looking at the last 5,000 trading days, we take that score and compare to the look back period, and compute the average and standard deviation. That gives us a z-score, or what we call the risk z, of minus 0.38. You can see a 90-day histogram of that here. This makes the market vulnerable to sharp volatility spikes, and this is not a time to be adding new swing positions, but preserving profits that you have and respecting your targets, being ready for emphasizing short-term intraday moves on the sharp volatility possibilities there. A couple overreactions and channeling signals fired today. You can see the winners in the 10-day min pain and max pain. A handful of channeling and overreactions in the ETFs for the extended ETF symbols, and some 5DDs in technology and in the volatility ETF. Caterpillar remains a 551W, and the auto framer has plenty of good quality names in that strategy. Here's the Dow Tactical Summary. Winners today: IBM, Chevron, United Health. Chevron was outstanding right from the open. Made some nice gains on that in our live trading workshop using the hybrid frog technique, and then working that into a chain trade with owl and pocket patterns. It's our new second generation RLCO framework patterns, and they work like a champ today. Losers in Nike, Disney, and Exxon Mobil. And we have a handful of frog quality numbers better than 3, and a handful of RSI2s that are single digits. In the ETF 30, more structured swing trade signals, and the way we're playing those are treating them as one-day candidates for good intraday moves, and only then would we use markets money to grow them into swing trades until we get through the volatile election period. I see oil suffered today, as did the volatility ETF, but U.S. real estate, anti-volatility, or straight up volatility, and utilities. Metals and mining were excellent today, offered some real major gains, along with, and in that space, Alcoa really stood out with a fantastic hybrid frog move right from the open. And when I say that, let me stop the tape here for a second and show you exactly what we mean. This is a quick look at Alcoa, and this is the market open right here, and our computed hybrid frog box. That's the difference between signal and noise. We put that on the open. When it moves that distance, we take along with the stop below the hybrid frog box. We work that one straight all the way up into this sideways quiet channel, at which point we took our gains. Later on in the day, we framed a trade to look at taking it back to the VWAP. That's the VWAP magnet trade, so there were actually more gains possible in this one, but that was such a smooth and orderly move that you couldn't ask for a better, more straightforward trade. In the energy space, Chevron gave us just some amazing trades in both directions today. This is the market open. Here was our hybrid frog boxes, and we played chevron long right out of the gate. Gave us nice gains until we had the regression line crossing the dragon for our orderly exit. We tried a second long here. It failed for a scratch. That led us into an owl pattern that captured this V bottom, and then the owl pattern reversal allowed us to enter here and make this gain all the way to the top. I wish every day was that smooth and orderly, but the chain trading from the hybrid frog into the owl and then the owl reversals paid off real well in chevron in the energy sector. In the afternoon, we were playing VXX on increasing volatility. We had a sideways quiet channel that compressed into a Z3 pinch box, and we played the breakout on that play as there was a shudder in the market, and we played that with a breakout from the Z3 pinch with our standard hybrid frog box of risk. That moved out in an orderly fashion. When it broke above previous resistance, we added a second position up here around 34.30, but that quickly started selling off, and so we scratched that trade and made bank on a rapid move, on a 50-cent move from here to here in about 30 minutes, and I think made the money on the easy part of the curve, if there's such a thing as the easy part of the curve. So all in all, had opportunities all day to work these new second generation RLCO patterns, to link them together with some of our advanced frog techniques, and had a very satisfying day one in the live trade workshop. All right, so back to our regularly scheduled briefing here. Moving on to the auto framer, many to choose from. High quality names. Intel is on our list, 3M, the Russell 2000, Merck. I'm expecting big moves in oil, and Treasury showed strong possibilities for a nice swing trade developing today. Caterpillar was testing its bottom and is in a posture to collapse. Home Depot, the inverse volatility, and even the SPY itself, all postured to make some very interesting moves tomorrow, both short-term and on a swing basis. And then lots to choose from here on the regression line fractal framework, which also paid off for us today in the areas of Apple and Microsoft especially. And just a quick look at the daily squeezes. Plenty of symbols that are postured for one-day pops that are using the relatively wide range risk, and compared to the range stat for the maximum one-day intraday move, we have some very favorable reward to risks, plenty to choose from. So we're in a target-rich environment here this next week. This is where we want to make hay as intraday traders. You see weakness in the S&P right now. The 30-day regression line is down. It's testing its recent swing low. This is troublesome. You can see the percent stretch relative to the 200 is collapsing, and the 30-period regression line left the river today. So today was the beginning of trending behavior downward in the market, and that means that a loss of another 3 to 5% in the next week or so is not out of the ordinary. That would be perfectly natural and normal, and so we are protecting our positions accordingly. Just flashing through some of the stat work. Healthcare is just getting massacred on the possibility of a Clinton presidency, whereas Japan, maybe as a flight to quality, getting away from the U.S. has been reasonable. You can see in the slopes of the regression lines that the 90 has really given back all its strength. The 30 is getting ready to collapse, as is the 10. You can see the market is popped out of the river today on lower highs, and another volatility spike like we saw a couple 6 weeks ago is still baked into the cake. And that's everything we want to cover for the daily report. We're getting ready for tomorrow, day 2 in the live trading workshop. We had a lot of activity in the live chat room as well. Some good synergy between the traders in there and the folks in the workshop. So major gains being made in learning and in results. It's coming along at Tortoise Capital. Keep your risk measured and your powder dry.